Hi, my name's Louie. I'm one of the senior traders here at Learn to Trade, and today we're going to be talking about currencies and how their value is constantly changing. We're then going to look at how we can potentially profit from this and try to teach you guys to do the same. Most of the world's major currencies are bought and sold on flexible exchange rates, and each currency has its own value, which differs from country to country. If you've traveled from one country to another, the UK to the US, for example, you've probably noticed that you got more American dollars back than the amount of British pounds that you actually changed. Not necessarily as much as it used to be, but that obviously is dependent on the exchange rate at any particular time. Money basically exists because otherwise we'd be forced to use a bartering system, which is both impractical and can become highly complicated. Around the year 700 BC, the Lydians became the first Western culture to make coins because it was easier than the alternative. Imagine I was a farmer thousands of years ago in a bartering system. If I had horses and I needed a pair of shoes, I'd have to find somebody who made shoes and trade it for a horse. As you can imagine, this would be very, very convoluted because shoes aren't obviously worth the same as a horse, and not all shoemakers may need a horse. And so I'd have to keep looking for one who did, or embark on a number of very intricate trades to try to get something that the shoemaker actually wanted. These early currencies were generally coins made of precious metals. Later on, the gold and silver standard would be developed. The gold and silver standard used paper money, the value of which was tied to the designated weight of gold or silver. So basically, if £1 was worth 1 gram of gold and $1.50 was worth 1 gram of gold, the exchange rate would have been fixed at £1 would be equal to $1.50. Now, because major economies have basically dropped the gold standard and moved to fractional reserve banking, the value of currencies are constantly changing, sometimes rising, sometimes falling. So going back to our previous examples, at time you get more American dollars for your British pounds than you would on other days. Completely natural, completely dependent on the exchange rate itself. This is because the only intrinsic value a currency now has is the value that we assign to it. So a £20 note is only worth £20 because we all agree it's worth £20. Whereas once, the value of money was tied directly to a commodity, such as precious metals. Its value is now tied to the reputation of our government and banking sector and the strength of the market in the country from which it comes. What makes the value of a currency rise or fall is based on many factors, such as differentials in inflation, differentials in interest rates, national debt levels, economic performance, stability of the government, and even governmental decisions. For example, on the 23rd of June 2016, the exchange rate was 1.5 American dollars for every British pound. But following our vote to leave the European Union, the value of the pound dropped by about 10%, and the pound would now only buy you $1.33. This is basically because nobody could predict what Britain's future global trade partnerships would look like, or accurately predict how this would affect the British economy. As such, the markets lost some faith in the purchasing power of the pound, which is a natural thing to happen. The foreign exchange market, typically known as Forex, has grown to become the world's largest financial market. The total daily trade volume is now more than 1,000 times greater than the combination of all stock and equity markets worldwide. In fact, $5 trillion are traded every single day on the FX market. So my job as a currency trader is basically to use technical and fundamental analysis to determine when the prices are going to go up, when the prices are going to go down, and basically benefit from the differential between them. So this is how we basically profit from trading the FX markets. If you guys would like to do the same, or you're just simply interested in learning more about the FX market, then visit www.fxtradingroom.co.uk to register for a free workshop. You can find the link just below, and we look forward to seeing you on the London trading floor.